Hey guys, thanks for tuning in to my video blog. This is Scott with the Adams Equity Group. We're going to talk about trend lines today. What is that? Well, it's pretty interesting stuff. So, stick around and see some of the interesting numbers we get to analyze in the real estate industry. Before we get started though, if you want, you can take a look at the buttons here on the side of the blog. I've got a home valuation button where you can see what kind of an estimate of what your home's value would be today, based on the sales, previous sales in the neighborhood and area where you live, and then also you can search all homes available in the Atlanta market. That is updated every 15 minutes, so it's the most current, most relevant information available in the market. Stick around, this will be cool. Appreciate you tuning into the video blog. Today we're going to talk about historical trend lines and inflationary value. What does that mean? It means how much does your home go up in value every year? If you look, there's actually historical precedent that'll kind of give us an idea of how we can gauge from a macro scale, from the really high view of what home values are doing. Obviously, it's going to be different from your neighborhood, on your street, and your house. However, these are kind of interesting macroeconomic ideas to take a look at. So what we're going to talk about is trend lines. So if we look at the beginning of time, since they've started doing the recordation of real estate values, home prices have always gone, up, but if you took the average here and you just over time you looked at what that trend curve would be, you're actually looking at about a 4% trend curve right here. So that's what the home valuation, your home would have appreciated about 4% on an annual basis. So in 2008, the biggest recession, market correction, banking industry failure that really kind of collapsed the housing market and the economy as a whole. It's an unfortunate circumstance, but it just tanked everything, and it cost a lot of people a lot of real money, and it's very, very unfortunate. But the recovery is going very, very well. So if we when we take the 2011 quarter two and we start another trend line here, going to 2018, 2017, where we are currently, we can kind of look, and again, this is kind of repeating that 4% trend line. You can see some of them are very high, maybe some of them are right at the line. This year I suspect we're going to be, kind of right at the line. Those last couple of years were a little bit above 4%, but you can look and you can see another 4% trend line forming, which is good. It kind of gives us some stability in the market. It means this craziness is not unlikely to happen because we have realistic numbers. Whereas in 2007, and we were seeing these super high inflationary numbers that were way higher. Some upwards of 20% on an annual basis, and those just aren't sustainable over time. So some pretty interesting stuff. I think the unfortunate problem is the restarting this trend line from here to here is about 16% of the home's value, and that correction, that's probably money that's just gone forever. So it doesn't mean that your house is 16% less than it was. Now this trend line has caught back up. Most of the market is fairly even, but continuing that 4% trend line, I don't think we'll ever get back to this trend line again if we kept going. But the new start, good news is we're back on track. And then we have some other good news is history tends to repeat itself if left unchecked. So what that means, hopefully, is that if this is the sales cycle and home values go up and go down and go up and it's just like the stock market. This is not actually a smooth line. This is the average line. Values would be doing this on the way up to create that average. So, but the interesting thing is if you look back over that historical data that I was just showing you, but between this point and this point, that's usually about a 7-year cycle. So if this is 2011, second quarter, that means that we're kind of here. The market's fully recovered. We're still seeing that 4% trend line as being the inflationary price average. So what does that mean? This doesn't mean that the bottom's going to fall out of the market. I don't think we'll ever see this again, thankfully. But it could be that it's maybe 1%, 2%, 3% over time on this next 7-year cycle. So if you're thinking about selling now, this year, I mean, maybe spring of next year, but I don't want to predict that far out. But if history tends to repeat itself and you're going to be selling, especially given those numbers that 4% trend line, now is a great time to take it into consideration. So anyhow, if you want more specific information about your home, feel free, give me a call, 404-564-5320. I look forward to chatting with you about your real estate needs. We'll see you next time. Thanks.